All right. Well, hey, thanks everyone for joining the stream. So appreciate y'all hopping on and letting me go through my lesson, and appreciate all of y'all believing in some of the TA that I do. But I'm going to do something a little bit different. I know y'all are very familiar with ICT concepts, supply demand, all that other stuff. I've been putting in a whole bunch of lines and stuff into my TA channel. Some of y'all might be unfamiliar with all of this stuff. So I wanted to just spend the afternoon going over a couple of the things that I do. So I've laid out a couple of different items here, right? We've got 4 different topics that I'm going to go over. So the first one, I'm not going to spend too much time on this, but in order to understand what I do in my channel, you're going to need to understand basic technical kind of patterns. So like that's going to be your candlestick patterns, things like head and shoulders, cup and handle, triangles, wedges, flags, pennants. And like the reason all of these things are important is just because, I mean, it's going to give you an idea of the like sense of like what's going on, right? So I've kind of laid out a couple items here, right? You're going to understand some of the price action, the market structure, continuation, reversal patterns. So I'm going to illustrate just a couple of them, right? So candlesticks, go on Google and look up, that kind of thing. But head and shoulders, like typically in my channel, I'll draw something like this. This is basically denoting the left shoulder, head, right shoulder, which means it's going to count. So if you actually look here on this SPY 30-minute chart, you actually have something like that right here, right? You have a left shoulder, you got a head, and then your right shoulder, you have this neckline right here, and boom, goes down. And then things like a cup and handle. So cup and handle could be something like this right down here. You have a cup that forms by a handle, right? You have a low and a higher low, and then it breaks out. So I'll typically denote a cup and handle by drawing something like this in my channel. And triangles, right? You have different types of triangles. You've got symmetrical triangles, ascending triangles. So like a symmetrical triangle is something like this, right? It's pretty even on both sides. It'll typically move like this inside, and it'll either break out like this or, the other way down below. You can't really tell until it breaks out one direction or another. Then you've got an ascending triangle. So an ascending triangle looks something like this, where there's a clear resistance followed by higher lows. And eventually, this is pretty bullish. It eventually breaks out to the upside. You've got your descending triangle, which is the opposite, right? So you've got lower highs followed by some support. So eventually, these lower highs will eventually break down. Then wedges. So we're all pretty familiar with wedges, where you have higher lows on a rising wedge, right? And it's making higher highs, but the higher highs are not moving as high as the higher lows are. So it's like something like this. So I'll show you in some of the TA that I do, like when I recognize some of these rising wedges. And, on the other side, right, you've got the falling wedges where you have clear lower highs, right? And the lower lows are not as low as the highs get. So basically looks something like this and, breaks out like that. So I'm gonna go ahead and delete, oops. I'm gonna go ahead and delete all of these just to kind of clear my board here. Oops, didn't want to do that. Okay, so that's all I'm going to go over really. And then you got your flags, pennants. Flag, basically something big like this, where you have like a little flag kind of structure. Typically it breaks out to the upside. In this case, it broke down. But you guys can get on YouTube, Google, and look up all these different technical patterns. The real meat of this call is going to be for the market algos. So you guys have seen, we've teased that I draw a lot of lightsabers and different colors and things like that. This is basically to show what the market algos are doing. So sometimes you're going to have several different market algos, and some of them are going to be more dominant than others. And what I've noticed is when they hit certain price levels or certain simple moving averages or some kind of target, an algo will turn off and another one will turn on. So, at the end of my day, right, you'll see that my chart will look something crazy like this, and you're like, what's up with all of these different lines? Well, we're going to go over how I put them together and how you can break it down to where it makes sense at the smaller time frame. But the reason why, let me see, I think I put some notes here. Yeah, so the reason why it's important to understand these is it'll help you with some of your entry exits. It'll help you nurture your trade. So for instance, right, you've got an analyst that says, okay, 4450C, okay, you put it on, but what do you do with it? When do you exit? When do you know if it's a shitty trade or not? You can use the market algos to help you figure that out. It'll help you with trading with the trend. So a lot of the times, some of us are trying to snipe the bottom, snipe the top. I don't like doing that. I like trading with the trend, and using the market algos will help you do that. And then finally, like spotting potential weaknesses or reversals. Well, sometimes if you use the market algos, you can tell when the buying or selling is starting to slow down and if there's going to be potential reversal. And you use some of your basic technical patterns like your head and shoulders, inverse head and shoulders, to see if one of those patterns plays out. And then finally, we love to get in on those really big moves. If you understand what the algos are doing, how the price behaves with them, you can get in on the breakouts, right when they happen. And typically you see me get those a lot. I get them during power hour. I got that during power hour today, using the structure and algos. And I'll walk us through how I came about doing that. And then the third topic, I'm going to talk about the daily simple moving averages. I use the 5, 20, 50, 100, and 200. These are used by professional institutions. And when you actually watch what's happening with the price action, you'll see it kind of ping-ponging back and forth sometimes. These levels are really important. We actually touched on the 50 SMA today and sold off from there. And I was calling it out in my channel too. I'm like, hey guys, this is a 50 SMA. You probably want to manage your risk. And that's pretty much where we got that triple top today. And then lastly, the last topic I'm going to go over are the Fibonacci's. So these are, I must have deleted the little note there, but these are the ways you can trade with the trend and without having the FOMO. And it's a good way to help discipline yourself so that you're not chasing a move. So I'm going to go over the Fibonacci's at the macro level, and I get a lot of questions on how I use them and what time frames and all that kind of stuff. And you can use them intraday. You can use them on the higher time frame kind of level. But for our purposes, since we're day trading, you can mostly stick with using the intraday. The people that are swinging likely are going to be using the macro pivots. But this is basically to help you trade with the trend at a nice discount rather than buying it at the top, buying it at the bottom, right? Okay, so I'm going to leave these notes up here, and we're going to go ahead and start with the market algos. So here, I put a couple notes in here, right? You want to start with using your 30-minute chart, looking for some whatever algos that you could find, and then down to the 15, to the 5, and then finally to the 1 minute. The 1 minute is going to show the algos very clearly, whereas the 30-minute is basic. I basically just use the 30-minute to set my boundaries. So I've already did a little bit of prep yesterday. But basically, the way that I do the trend lines, when you're on an uptrend, you want to set trend lines where you see at least 3 points. And if you're moving up, you want to connect the points from the higher lows. And then conversely, right, if you're on a downtrend, you want to look for 3 points where you can connect the lower highs. So I'm going to just unhide this here, right? We see a couple of different algos, right? And this one, this pink one, I actually put this one in yesterday, and look at how perfectly this worked out right here. Like I didn't even see these points, from today. I only use these 2 points here. So I said, hey, use 3 points. This one only has 2, but here, right, this red one, we've got at least 3 points connecting here. This blue one, I connected these 3 points right here, right, on this uptrend. This green one from this bear flag earlier, 3 points. And then on this orange one down here, we only have 2 points, but this is, for me, I'm using this as like an, oh shit, the market's going to die kind of support. But there's probably more that we could find, but I just want to show y'all like kind of how I prepare like every single evening and what I'm looking at. So what we can do with this, right? So this pink one, right? We could see that we possibly have a selling channel. What I would do is I would hold control on TradingView and just drag it so that you can get a perfect parallel line. Sometimes if you just do Control V, it's not going to give you the most perfect line, but I'm going to move it to where we possibly have a channel. And I'm just going to make this, thinner. And then this red, same kind of deal, right? It looks like we possibly have a channel right here. I'm going to move this down right here, make it thin. And then this blue algo right here, looks like we possibly have a channel right here. I'm going to move that there, make it thinner. And then this pink one right here, I'm going to move this right here, make it thinner. So you could see, right? Once you find your 3 points, on your 3 points for resistances and supports, you can start moving them around and just kind of seeing where you possibly have channels. This green one right here, I'm going to move this up right here. And, right now on the 30-minute, you might not see everything, okay? I'm just going to say that right now. You might not see everything, but this is why, like, as long as you have some supports, resistances, you start drilling down. So let's move this down to the 15-minute now and see what we can see. So 15 minutes, you can clearly see some bouncing back and forth here. You can see some bouncing here, bouncing here, bouncing here, right? Sometimes you can spot some additional algos once you start drilling down. So right now, I don't necessarily see anything, but I do see that here within this pink channel, we have some buying right here. So what I like to do is I'll look back on some of the previous algos that I used and see if any of them are repeated. So what I find happens a lot of the times is whenever I see like a downward algo like this and then it breaks out, typically this algo will be seen again, but rather than being like a selling channel kind of algo, it'll be more of like a controlled selling kind of algo where once the price gets above it, it starts to break out, right? So like if we look here, right, we have the selling channel, it breaks out, and then once it breaks out, you have a nice move up. And you pretty much have a really nice move up there. I'll break it down on a smaller time frame to see if we can spot where we could possibly see this algo again. Like right here, it looks like there's some kind of algo right here. And once that algo was lost, the price broke down. And like here, right, if we look at this green algo, once the price went below this one, we had a pretty nice move down. So we possibly have this green algo right there. So I'm going to go ahead and just copy this, move it there, and see if, there are 3 points. It looks like we possibly have 3 points here, right? So I'm going to move this down to the 5-minute and see if there's anything else that we could catch. So yeah, on the 5-minute, right, look at how it wicks off of this green line. So this green line looks like this was potentially one of our algos. And I'm just going to kind of move it down to the 1-minute and see, what else. So yeah, like if we look at this green algo from earlier, this one was from this giant bear flag that played out, right? Like I just kind of used that as a hint. Once we had price fall under it, right? It broke down, it tested it, broke down, and price just went further down from there. Here today, right? We went along this green algo, the price broke down, somewhat retested it, went down a little bit lower, and the price tried to get back to it. And so, like, once you figure out what your potential algos are, you just want to watch them on your 1-minute chart and see wherever you possibly, can see it repeated, right? Like, so the bottom of this pink algo looks like we had it right here as well. So I'm just going to make a copy here, right? So what I'm thinking is once the price gets above this pink line, let's say on Monday, if it happens to get above it, it could possibly move up higher. Just because, right, we have this resistance right here and it's been selling off, and, we see broke out from here, but there you see the algo working the exact same way here again. So that's essentially what I do. And as you get to the intraday chart, you can copy the algos over and over again and see where else you could possibly see it, right? So like for instance here, right, in this red algo on the 1 minute chart, where else do I possibly see points where it connects? Looks like kind of right here, right? It's going back and forth between this bottom one and top one, but a lot of the times the algos have like a range in the middle. We see that here. We also see that right here. Look at how these points touch almost perfectly, right? So like whenever I see this, I use the top and the bottom as the channel, and that's pretty much my guidance. Like here, right, it broke out from the CPI news, but this pink algo came and took over, and it shut everything down and took it right back into this red algo. But typically, right, whenever I see a move like this, right, we had this really strong blue algo from Jackson Hole, right? To me, this looks like a really large flagpole followed by a flag. So typically, right, maybe there was some news or something that happened, but typically, if I see a selling algo that's flat like this and I see it break out, like right here, it's typically a larger move up. We didn't get that this time, but that's just the market for you, right? It doesn't do exactly what you want, but whenever it moves like this, right, and if it breaks out, typically you're gonna, for the most part, like you're gonna have a pretty nice move up, like within this structure here, right? If I zoom in, this, like, we have many bull flags in here, right? You have a flag here. I mean, you have a flagpole here, a flag within this red structure here, and then breaks out, you have a decent move up. So if you can spot this kind of behavior and spot the algo and see whenever price is moving within it, you can catch, some pretty nice moves. And look, at the end of the day, right, we're not trying to catch the short from this point all the way down to this point. We're trying to catch the short from here down to here, or here down to here, right? Like, I'm zoomed out. It doesn't look like a lot, but this is 452 down to 450. That's a $2.50 move. If you've got options or futures, that's a hell of a lot of money, right? Like if you're able to catch something like that, like even from, I mentioned, right, like we have a flagpole followed by some, algo movements, right? But even like from here to here, right, if you just go by the algo, that's a, 80-cent move. That's a lot of money that you can extract. So this is basically just a way to try to find high probability setups using some of the past relationships and behaviors with the algos and the price movement that follows. So let's look at where we're at today, right? So I pulled this green algo from earlier. Let's see where else we possibly have it, right? So if this was the support, look at how almost perfectly this price action follows the top here, right? And it's obviously acting as a resistance. And even on the 1 minute, right, and intraday, we have other kinds of algos that we're not going to see on the 30-minute. And every day is going to have its own kind of algo. But I mean, even look here at this pink algo, right? We can move this down, and it's pretty much acting as our support down here. Right. So whenever you guys are looking at my channel, you're seeing all these lines. I basically started with, let me just kind of go back, but 5 lines to begin with, and then at the end of the day, it turns into this giant mess because I'm basically copying the algos over and over and seeing how the behavior is. So I'll after I stop the recording, I'll take some questions. We can talk through all of this stuff, but that's basically it. In terms of how I put the algos together. Now, how I read the algos is a whole other thing. So I'll go ahead and just kind of go through that right now. So here, right, we have this green algo that is, it's moving up, but it's not a super, strong algo, right? So in between this intraday chart, I see like a couple points right here, 1, 2, 3, that could potentially be a really strong algo. So I'm going to mark these points right here. And honestly, that's probably not a good one. This is probably the better one. So this is an upsloping algo, and it has a much higher angle, right? 70 degrees versus this green one. So like intraday, right, I'm seeing that this is a pretty strong algo. So I'll denote it by blue like this. Whenever I see like a strong kind of angle like this, you're getting buying continuation, right? It moves up, it starts to flag, finds support, moves up, flags a bit, and then moves up. And right here, right, it breaks down, and that's kind of it. So let's say you're trying to trade with the trend, and you see my chart. I have a nice up moving channel. Sorry, I had to shut Alexa off. So here, right, you've got this pink algo. It's looking like it's kind of a resistance of this flag, right? Breaks about out above. So let's say you bought right here. And you're like, okay, cool. I have calls, and hey, it's moving up nicely. I'm in the money. And then you get these red candles, right? It's starting to sell off. You're like, oh shit, what do? Do I hold on to these calls or do I sell? Well, it's still within this algo. So if you didn't take profits here, right, and you're wondering what to do, you should still hold on to it. As long as this algo is holding up and is acting as a support, you can keep holding on to it, right? So here, right, it continues to move up, continues to move up, continues to move up, and then finally, right, with this candle, it breaks below. Well, here, this is where I would cut my call, take profits. And, here, right, if you bought it right here, you could have sold it at a loss right here, but you held on because the algo was still working. You sold it right here, which is below this blue line. You lost a little bit of money, but you sold it right here instead of here. So you made some kind of profit. So that's one way to do it. When you are using the buying algo like this, you could sometimes spot other kinds of algos that are also moving upwards, but not at this kind of angle. So right here, right, I see there are 3 points where it's starting to sell off. So if I connect them like this, it looks like it's forming a resistance. So like right here, right, you have an angle of 61 degrees, or well, 49 degrees here. And then here with this resistance, I see 24 degrees. So when I see something like this, even though this is an upsloping kind of algo, it's telling me that the buying is tapering, right? So if I saw something like that, I would start to move. I would try to make a copy and move it down right here to see if this was the start of our tapering buying channel. So you have 1 point here, 1 point here. So that's something. It also touches right here, and you could also see in the middle if it's also showing that it's following the tapered buying, right? So you can see here, right, it's moving up strongly, but then you're not getting any more strong buying continuation. It's moving within this tapered buying channel. So in this case, right, it actually breaks down, right? So you have a left shoulder, head, and a right shoulder when it falls out of this channel, but sometimes it doesn't do that. So let me color this real quick just so we don't get confused. Sometimes what happens is you're going to have 2 algos working at the same time, and they're going to both work together to push the price up. So you're not getting that in this case because this one falls out of the strong buying algo. But if we look inside of this, right, do you see how I started this buying algo like outside here? But what about here? What happened here? If I actually move this closer in, we have like the buying algo, within this larger channel. And if we look at what's happening here, you can kind of see that this tapered buying channel is working with this strong buying algo to push price up a little bit further. So sometimes we'll get something like that. Once it breaks the support though, you'll eventually, get that right shoulder and it'll cool off. But basically the point is whenever you start seeing tapered buying like this after strong buying, it's a sign of weakness. And, when you start seeing resistances at the top of a tapered buying channel like that, there's always a possibility that it's going to taper off and sell off, which is why, especially at open, you guys are seeing me in my channel like, hey guys, the buying is starting to taper. It's because I'm sensing that, there's a possibility of a strong sell off coming. So let's look at what happened today. So let me see where we freaking started. Oh, that was today. Okay. Well, that's exactly what happened today. So yeah, today's the 8th. Yeah. So we started this morning off with this strong buying, right? And I started seeing it taper off. And yeah, that's exactly what happened. And then, yeah, so I think right here we hit the 50 SMA, and that's kind of when all this strong buying started to kind of turn off. So that's kind of it for that. But yeah, basically, let me go ahead and just kind of back up, right? You want to start with your 30-minute chart, and you set your algos basically from there. So let me go ahead and hide all these guys. That didn't work. But yeah, basically, start with your 30-minute chart, work your way down, and see if you could spot the algos. Once you have your algos, you can likely use them over and over again down to the 1-minute chart. And yeah, follow the algos as you trade. So one thing that I saw today, right? If I move this green algo down, like so, right? Like you guys saw, like I was bullish at one point, right? I think I caught part of this move up and I had a runner left and my runner pretty much got stopped out somewhere around here. But like this goes back to understanding what your technical structures are, right? To me, this is a really large flag pull followed by a flag. And I noticed, right, this bear flag was following this green buying channel, like almost perfectly to the T. So this is why I was saying, hey guys, this is likely a bear flag. When you can spot like these wicks, especially on the 1-minute, following really closely to the algo, it's likely that you have the correct algo. And here, right, whenever, like, what do we learn about that green algo from earlier? Whenever the price goes below that green algo, it tends to sell off a little bit further, right? Like here, right, it was a bit of resistance. Here, it was some support. And here, right, this is where that green algo broke down, right? This is actually stemming from yesterday, the 7th. This is the bottom of the green algo. We had some support here, and then finally we had support here right before this really strong selling candle came in, which broke right through it. Typically, when I see a strong selling candle like this break through the algo, that's telling me, hey, this algo is no longer going to be support, it's going to be resistance, which is, pretty much what happened. It was support inside of here. We lost that support, broke down, and tried to reclaim some of it at the very end here. So let me go ahead and move this down and see what happened. Like here, I weekly had 2 points here that followed this algo. If you move it up here, you had a couple more points follow it. But basically, right, we had a false breakdown. This false breakdown, it was following this pink algo right here. So this is why this could get really confusing sometimes, because like you have so many algos that are working at the same time. But like what I know about this pink algo is like here, right, we have the top where it's resistance. At the bottom here, it was being support. So basically just took an educated guess that we were likely going to have some kind of reversal, because intraday here, right, we we had this strong selling algo, which I should probably draw. If I draw a line from this top, down here, right? I'm going to color this red. This was a very strong kind of selling algo. And if I zoom in right here, you could see that there were 3 points that touch it, quite perfectly. So like here, right, within this selling channel, this red selling channel, you have this flagpole, followed by a flag, followed by a breakdown. But then you don't get further selling inside of this red, which was telling me that we likely had some tapering on the selling. So you have this pink selling algo, which is a little bit flatter, acting as a support. So when you see some of that, there's possibility that it's just going to wedge and reverse for a bit. So if you look at my channel earlier today, I said, hey guys, we potentially have a wedge. So like when I say wedge, right, we have a strong selling algo followed by a weaker selling algo that's acting as support. So if you look here, let me try to draw it in. That doesn't help because it's the same color. There we go. Right? You have a falling wedge right here where there's strong selling met by weak selling support where it's acting as a support right here. It breaks out of this wedge, and then what else do we see here? I see a inverse left shoulder, a head, inverse right shoulder, and boom, breakout. This is how I caught that lotto at the end of the day. And look at how it's interacting with this pink algo as well, right? So I could move this right here to connect these 2 points. So here, this pink algo is acting as a resistance and selling off. But for me, right, what I was noticing was market structure. You have a low followed by a higher low, followed by a higher low. So there was a good chance that it was going to, continue moving up, especially after a really strong, selling session that lasted like 2 hours. So that's essentially, it and how I use all this stuff. Like just to kind of summarize, right? You use your 30-minute chart to look for what your potential algos can be, get all the way down to the 1-minute chart. And on your 1-minute chart, try to spot where you see the repeating algos. Look at how the price is reacting with the algos. See if you could spot another algo if the current algo that you're using isn't working, and see if that's forming some of those structures that we talked about, your head and shoulders, your wedges, etc. Look for tapering, right? You have strong buying followed by weak buying, likely going to lead to tapering, right? It's kind of like the turn of a wheel. So like if I draw it, right, it almost turns it like this, right? Really, really slowly. Like we're trying to be really quick with calling the reversal, but like for me, I would rather be late in trying to catch a reversal and looking for that lower high before shorting, because there's no worse feeling than picking up SPX contracts, picking up SPX shorts right here and it just kind of keeps going, or picking up SPX shorts right here and then you're stuck, right? Like I hate doing things like that. So I would rather have, waited to see market structure break before picking up shorts. So it's just there's a lesson and there's a method to some of the madness that I do, but that's essentially it in terms of the algos. So let me back up a bit. Okay, so I'm going to move on from that. I'm going to talk about the daily SMAs. So let me go ahead and just hide all these, or just delete them. Okay, so I have an indicator here that I love to use. It's called the daily SMAs, but this basically plots the simple moving average as on any time frame you have. So like right here is on the 30-minute. Here, this is on the 1-minute, right? So on the 1-minute, it just looks like any kind of EMA line. But on the 5-minute or lower, it just shows as a flat line because the daily moving average is just a point. during the day. So I like to use this because these typically act as price targets. Institutions use this. So the blue is the 5 daily SMA, the green is the 20 daily SMA, the yellow is the 50 daily SMA, and then I also have the 100 and the 200. So overall, like the price is above our 200 daily moving average, which is, on a long time frame, it's bullish overall. As long as price is above the 200, you're net bullish. But on the intraday kind of time frame, right, we use the 5 and the 20. So when the 5 daily SMA is above the 20, it's net bullish. But if we look at what's happening right now, our price action is currently wedged between the 20 daily SMA and the 5 daily SMA. And what we can see here is the 5 daily SMA is sloping downwards, which is saying, hey, even though it's net bullish overall, in the short time frame, it's actually a little bit bearish. But as long as it's above the 20, it's still somewhat bullish. So what we could possibly see here is we might have an inverse head and shoulders, right? We have a left shoulder, a head, and potentially a right shoulder right here that could break us out possibly next week. Next week effects could be a lot of volatility. We'll see what happens there. But a lot of the times the price is going to interact with these daily SMAs and you're going to get some kind of reaction. So this morning, right, I was calling out, hey guys, we're at the 50 daily SMA. Watch for some kind of reaction. And we got exactly that. We got a triple top there. What happened yesterday? Yesterday, we had interactions with the 20 daily SMA, right? We started below it, had a fake breakout above it, tried to get back over it, and we had a triple bottom, broke out from it, and tested it here once, never made it back. Here, right, 20 daily SMA, inverse head and shoulders right here. It broke down overnight, but you can kind of see, right, these are some really important levels to keep in mind. And then here, right, we had that really big uptrend after that Jackson Hole speech, and then we finally kind of zigzagged this day and broke down from there. But a rule of thumb that I like to follow is as long as the 5 is above the 20, you're going to be net bullish. When the 5 crosses below the 20, you're going to be net bearish. So let's look at some case studies in terms of like what happened. Let me go ahead and let me move these. Something that I was taught was if you're trying to short this market, you don't want to short it while the 5 daily SMA is above the 20 daily SMA. So something that happened earlier in the year, right around May, was we, not even then actually, let me go a little bit further. Like at beginning of the year, right? We had a cross of the 5 below the 20, and once that happened, you had a pretty nice sell-off, right? Once the 5 crossed above the 20, it's pretty much been an uptrend ever since, right? You could have pretty much swung calls all through that. Leading into Jackson Hole, we had a 5 cross below the 20 SMA, and look, you probably could have swung this for a couple of days. This crossed on August the 4th and didn't cross back over the 20 until this day, right? August the 30th. So you pretty much could have shorted SPY from the cross of this 5 cross below 20 all the way through August and probably made out with some profit. Right now, the 5 is above the 20. It's possibly going to cross back under, but what kind of structure do we have that could prevent that? We have a inverse left shoulder, a head, inverse right shoulder that could push it above it. So I'll share the indicator for that here, but the one that I use is this one. It's called Daily Simple Moving Averages X5 by jasmineco.something. But I keep it on every single one of my charts. You can even use it with other tickers like Apple or Tesla or something like that. So feel free to ping me after this, and if you want to ask me about the Daily Simple Moving Averages, but it's a really good one to use. So that's pretty much it for the Daily Simple Moving Averages. So the last topic I'm already at 46 minutes, but the last topic, I'll just go over it quickly, right? Fibonacci. So here you can use Fibonacci on a number of different time frames, but the way to use it is if you're in an uptrend, like first of all, you need to know if you're in an uptrend or in a downtrend and like what kind of time period you're trading, right? So earlier, right, here we were obviously in a downtrend. You can either try to FOMO the downtrend and, play play puts, at the very bottom and, get cucked by price action like this, or you can try to enter where you have much better, where you basically have a discount. So if I fib this top down to this bottom, right, there are different areas where we could have gotten nice discounts on a downtrend. So let's say this is a downtrend overall, right? This was our top, this was our lower high. If I look at these fibs, we have different levels where we could have gotten in on the downtrend at a discount. Some popular zones for fibs are going to be your 618 and 786, right? So a lot of the times in my channel, you're going to see me saying, hey, this is our 618 fib. When I say 618, it's likely saying that you're getting the trend at a discount. So in this case, right, if you wanted to, let's say, do a long swing to the downside, here, you never got that nice 618 pullback. Like if I start the fib here and go all the way down to the bottom, like on each base. So like once you see a top, you need to move your base lower and lower until you get the discount that you want. So like here, I think we had this downtrend the entire day. This was our top, this was our bottom. So if I left the fib like this, you can see that the price made it back up, but look at where it stopped. It pretty much stalled at this 7-8 fib. So you could have taken a short around this level and had a pretty nice discount, and if you're wrong, you lose out on, maybe $1. But let's say, you're like, oh, the downtrend is over and you buy calls right here. Well, you lose out because that was it. So, this is a good way to not FOMO in and try to get things at a discount. And, typically when it reaches some of these fib levels, and if it's going to continue that trend, you're going to see some kind of reaction. So in this case, right, we got a nice indecision doji right at that 786, and it sold off from there. Now, let's say you didn't catch that, right? And let's say, you don't want to use this pivot. Well, the next day we gap down, right? So here, you can either leave this pivot here and continue moving it down, but the price after it gaps down like that, it's likely, on a different wave. What I would do is I would move the base of the pivot to this high and continue moving it lower, right? So like here, we get a nice pivot at this point where the price returns all the way up to the 886 Fibonacci. So as long as it doesn't fully retrace, you still have a nice downtrend. So from here, we could have gotten a nice short from the 886 Fibonacci, shorted it, and you would have had really nice move down. So like on a large time frame, you can use it like that if you want to do swings or things like that. But I know most of us are day traders where we like to use these things on an intraday kind of time frame. So if I just go to the 1 minute and look at how today worked out, and yeah, we got 10 minutes till 4 o'clock. I'll try to end soon before the day ends. I don't want to take up too much more of y'all's time. But there are different ways to do this, okay? So if we only look at the opening price, so the opening price I think started, yeah, it started right here. If we look from here to here, right, what do we have? It looks like we have an uptrend, right? So I would start the base here and just move this fib up to, different points and see if I get that nice discount pullback. Here, I don't really get it. Here, I don't really get it either. Now here, right, this discount moves down to the 50 fib. The 50 fib is actually not a bad discount price to where you could buy the dip. We can, combine this with those channels. It was within the buying channel, so you could have bought it around the 50 fib here. It would have worked out pretty nicely. But let's say you didn't catch that. Okay, well, let's move this up again to here. From here, do we get a nice pullback to the 618? No. And from here, do we get a nice pullback to the 618? We kind of get a nice pullback right here to the 50 fib, somewhat 618 fib area. You could have taken calls here and had a pretty nice scalp. So that's one way to use it, right? Now, let's say this is no longer in an uptrend, right? That's kind of what happened today. This ended up being our top, and then we started a downtrend. So let's say you wanted to get in on the short. Well, if you look at this, what would have been a good entry point for a short? Yeah, you probably could have bought it right here and been okay, but it didn't continue down, right? So let's see, right? To get the best kind of entry for a short, how could we have used the fib today? If I mark this top and the bottom of this run, right? This was the bottom. It ran back up, and it ran back up to here. So we hit that 618 level. We could have shorted here. Honestly, I probably would have shorted here. I wasn't trading at the time, but I would have shorted here. I would have caught some heat, right? Because it moved up a little bit more. But what happened here, right? It hits the 786, starts to flag a little bit, forms a little bit of a triangle, and it breaks down. And from here, right, it moved down pretty nicely. You would have had a pretty nice scalp. Even if I held that 618 short, would have had a pretty nice scalp right here. But right, let's look back at our market structures. If we have lower highs here, I think we had a triangle or so. Like, it never broke this neckline, so there's always that risk that it could pop back up. But if I leave this fib alone, moves back up to the 786, probably could have shorted around here. And if you short it from here, it made a really nice move down. You would have caught this entire move all the way down. Now, let's say, you missed that. Okay, well, you look at what the other pivots are. You can mark this pivot, and you mark this pivot, right? Here's a pivot, here's a pivot. Where could we have shorted? 886, right? This 886 is typically a secret reversal kind of area. So if price makes it back up, we get to the 886, you could have shorted from here all the way down here. Let's say you missed that one, right? Well, let's use this as the new pivot. Move the base down to this spot right here because this pivot sells off here. Where could we have sold it? Well, boom, right here, 618. Short 618, goes down lower. So that's basically how I do it. I don't just choose any kind of random level as long as it's a pivot and it's blatantly obvious. So like a strong, sharp turn like here, 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 you can basically just trade the trend, using the fibs. Now, after that breakdown, it would have been pretty hard to use the Fibonacci. Typically, when you have a breakdown like this and the fib doesn't, or the price doesn't make it back to the 618, it's likely a pretty strong kind of selling continuation pattern. So if I kept the base here and moved the bottom to this area, it made it all the way back to 618. Probably could have shorted here, but this was at the end of the day. So that's essentially how you can use Fibonacci's to trade with the trend and at a discount. It doesn't work all the time, but when it does work, the times where it works and you hold on, the profit that you would make from that is going to far outweigh the profits you'll get from, the losses you would make from taking those 618 pullbacks. So that's essentially it as far as my TA. I went for almost a whole hour, but I'll try to summarize if I could find that. So we went over basic technical patterns. So candlesticks, head and shoulders, cup and handles. Get on Google, get on YouTube, learn these patterns because I refer to these all the time in my channel. We went over the market algos. So the market algos, again, you start with the 30-minute chart, get all the way down to the 15-minute chart, down to the 1-minute chart. 1-minute chart is going to show you the clearest algos. These are going to help you with nurturing your trades, finding the breakouts, entry exits, recognizing flags. things like of that nature. It's going to help you with spotting weaknesses, potential reversal times, and you'll get in with the large moves. We talked over the daily SMAs. These are those moving averages that the institutional traders use. Really important price points. We talked about how you don't short swing when the 5 is above the 20. You only short swing when the 5 crosses below the 20. etc. And then we talked about Fibonacci, right? Talked about Fibonacci on the higher time frames and how you can use fibs to get in on larger time frame trends, at a nice discount. We also talked about using fibs intraday and how you can get in on the intraday trend at a nice discount. So that's essentially it. So I'm going to go ahead and stop the recording here.